Morning, guys. Keith at Crypto Bullseye. So we've took a battering over the last few days. There's no doubt about that. It's created fear. It's created indecision in the market, and it's already started that panic selling. It's already started the liquidation hunts. So we've wiped out lots of liquidations, and we were expecting positive news yesterday. We were expecting that driving narrative yesterday. Guess what? It was a bit of a nothing burger. And we're going to be talking about Algorand today. What needs to happen for Algorand in the short term? Could we potentially see more downside? And what levels, if we do get a push, are we likely to get a reaction from next? So this is going to be pure raw data today, guys, on Algorand. We're going to be looking at potentially what downside levels we're going to use as protection zones, what's likely to happen next, and we're going to be going across multiple time frames to create that narrative for Algorand. Because we watched this yesterday, guys. We watched this press conference with David Sachs, and we were expecting that to be the driving catalyst. To think that the driving catalyst is going to be something that is going to be in a press conference when everybody's watching, when everybody's waiting for something to happen. And this wasn't bad news, guys. It wasn't really good news, but it wasn't bad news. So what it's done is it's opened the door for interpretation, for positive news narratives in the future. So there's a lot that's happened within that speech, guys, and none of it was bad. So that's the good thing. That means that we'll be seeing positive news going forward. That means that the driving catalyst, the driving narrative of starting this crypto bull run is probably likely to be quite soon or sooner than we think. So if we talk about Algorand, this is the daily chart, and you can see one thing: we've dropped out of a bull pennant. Is that bullish? Is that bearish? Dropping out of the bull pennant is bearish to the downside, guys. Where are you likely to hit? Next level of support here was the 200 daily moving average. Had a bounce off the 200 daily moving average, and what we're going to do is we're going to change this now because it's no longer a bull pennant. It's no longer a bull pennant now, guys. This is a channel. So this is actually a bull flag now. So what we're going to do is create the flag. You can see, there we go. So we're in a bull flag, and we know now that we need to do one of two things. The first thing that we need to do is break the mid-range. The mid-range is actually sitting at this previous support, so that coincides as double confluence. So this is going to be a strong thing to push up past 33 cents. If we see a push up above 33 cents, then that's going to show that you see an acceleration to 42 cents, or there's a high probability that you'll see an acceleration to 42 cents. So that's in the short term, guys, and that's within this range. Down at the bottom of the range, if you're accumulating, these are the best times to be accumulating. These are the best times to be accumulating. You can tell the buy orders are here. Look at these wicks. Buy orders, pushing it back into this channel. So we're not in a bull pennant now, we're in a channel. That identifies, or it helps us identify exactly where support is and where resistance is. So we've got our channel built in, and of course we need to add in our trusty Fibonacci. So what we're going to do is we're going to look at the retracement. First of all, we'll look at the retracement on this swing from the bottom to the top to find out if there's any sticking points. Are we holding any levels? 618, guys. Look how strong this 618 at 30 cents is. This is the reason why we need to break and close above. So in the short term, if I just zoom in, we need a candle close that takes out 0.3188, which is the extreme high of these previous 2 days of candles, which would wipe out the previous 2 days. Then once we've taken out the 33 cent level, then you can expect a continuation to the top of the trend. When you get to the top of the trend, the fight of tug of war happens again between the bulls and the bears. So we know that there's buy orders down here. You can see by these wicks, buy, buy, buy. We know what we need to do in the short term. So that's just over the next couple of days, guys. Right, okay, what I'm going to do next, we're going to be using lots of Fibonacci's on here. What I'm going to do next is stick an extension tool on there. So if we stick an extension from its swing low to its swing high, back down to its swing low down here, then we're going to be looking for 1272, 1618 extensions. So you've got a 1-to-1 equal measured move here. That's sitting at 73 cents. That's minor resistance. Let me just look left. Clues look left. There's a bit of resistance there at the 1-to-1 equal measured move, actually, guys. But when you see swings like this, what I call it is a bump and a run. I'm going to show you exactly why very shortly. You expect that this swing would be at least a 1272. Usually expected to be a 1272. So the 1272 is sitting all the way at 87 cents. Let me just build in these areas. 87. 1-to-1 sat at 72. Price action is currently sat at 28 cents. Okay, so what I'm going to do now is I'm going to zoom out onto the weekly chart. So this is higher time frame. This is more macro. And then we're going to look from its previous all-time high down here, from its previous all-time high, to find out if there is any sticking points as far as the fib levels are concerned. So you've got the big 382 here. This is going to act as such strong resistance. That big 382, guys, is $1.36. So far from where price action is now, it's over a 10x, $1.36. Not quite a 10x, actually, guys, more like a 6x. So $1.36 from where price action is now, that's going to be a strong resistance. What if we add a Fibonacci retracement from its previous bull market high to where price action is now? Is there any sticking points? Got your 382 here. So clues look left, clues look left. This was a previous reaction point. See? Support, support, comes through, resistance, resistance, flips through until ultimately it comes down. That is sat at $1.17. So $1.17 from a macro perspective is the 38.2% retracement just from its previous bull market high. So that's quite conservative as far as the bull market's concerned, guys. This is the weekly chart, and this is going over the next months, not the next few days, not the next few hours. So this is the higher time frame. So ultimately, guys, we are in a channel. We need to be staying in the channel. The aim of the game in the short term is to break the 50% level of the channel, sitting at 32, 33 cents. Once we break 32, 33 cents, then we can come back, test the channel. Aim of the game is once you've broken out the channel, that gives momentum to the bulls. Once the bulls have got momentum, then there's conviction that the sell orders are going to start pulling off and pulling off. The buy orders start pushing in and pushing in. Guess what, guys? Sell orders will then become buy orders. Then the narrative will follow because more people have conviction once you've got that break. All about momentum, guys, all about momentum. So one thing we can see if we look at the indicators is you've got an overbought stochastic RSI. So that's showing potentially you could come back down. Now, I was talking in the Discord group this morning. I was saying in the Discord group, it'd be hard sometimes. And I give an example of Doge. And I said, do I think that this is going to come back and double bottom? Or do I think that there's going to be a V-shaped recovery? Guys, I think that there's going to be a V-shaped recovery. Whenever the narrative starts, whenever a crash and a pump happens, i.e. a capitulation, whenever that happens, it is bought up so quick, guys. It is bought up so quick. It doesn't get a chance to come back down and retest certain levels. So this stochastic on the 4-hour is showing us that this potentially could come back down and create that double bottom. So if it does come back down and create that double bottom, does it mean we're going to the moon? Probably not, unfortunately, guys, because if we're coming back down and testing this level, what's it doing? Giving people another chance to get back in. Giving people another chance to get back in. They will take it like this. This is a V-shaped recovery. Let me show you the difference, guys, to a double bottom and a V-shaped recovery. So you've got this. You've got price action coming down, coming down, coming down. It's grinding down, it's grinding down, it's grinding down. Bam, straight away. All of this price action that's pushed price down, all of this bearish price action that's pushed price down. And by the way, guys, all of this is fear. While price has been pushing down, the new people that are into crypto, the retail, the people that don't understand it, are panic selling, panic selling, panic selling, panic selling here. Bam, straight away. And guess what they're doing? Buying back up here and buying back up here because they're getting FOMO. So this is the bit that's designed to wash you out, guys. The pullback is designed to wash you out, and you can either capitalize on that, you can either prepare for that, or you can either sell it at a loss, capitulate, and then you can buy it back higher. So the choice is yours, guys. Hope you enjoyed the video. I've got Gala Games next. I'll see you very shortly.